This stock is sales plus 6%, profits plus 60%, energy efficiency in action. And I'll tell you something, the market does this sometimes. It looks away from something obvious right before it moves. There's a company out there whose name literally tells you exactly what it does. Oil, India. Put those two words together, and you get the company. But I'm not going to say the name yet, because I want you to feel what the numbers are saying first. Stick with me. 60 seconds in, you'll understand why I'm excited about this. There's a government-backed upstream oil and gas company in India. Upstream means they find the oil, they drill for the oil, they produce it. They don't sell it at petrol pumps. They go deeper than that. Now, this company has a PSU tag, and the moment people hear PSU, they switch off. Government company, boring, slow, moving on. But here's what just happened. Q4 March 2026 results just came out, and every single number went up. Not a little, not, okay, decent quarter. We're talking a 60% jump in profit, year on year. Let that sink in for a second. Because India runs on energy. This isn't a trend. This isn't a theme play. Crude oil demand in this country is structural. It's not going away next quarter or next year. And when a company with government backing, the kind of backing that means it's not going bankrupt tomorrow, starts posting 60% profit growth year on year, that's not a fluke. That's momentum building. 3 things make this interesting right now. 1, government-backed, which means stability that private players can't promise. 2, it pays dividends. With profits this high, that dividend is looking very attractive. 3, 60% profit growth, year on year. That number keeps coming back. Now here's the part most people are missing. Everyone right now is chasing AI stocks, renewable energy, new age fintech, fancy themes. Nobody is watching the company that actually fuels the economy. The market has a blind spot on PSU energy right now, and that blind spot is where the opportunity lives. Let me show you 2 specific numbers that made me stop scrolling. Visual cue. EBITDA doubled. EBITDA, that's basically operating profit, went from 2,588 crore to 3,281 crore. That's a 27% jump in 1 year. That tells you the business isn't just selling more, it's keeping more of what it earns. Margins are expanding. And earnings per share went from 8.05 rupees to 12.91 rupees. Think about that. If you owned 1 share a year ago, that share is now earning 60% more for you. Same share, 60% more earnings. That's unusual. All right, let's just run through the numbers clean. No fluff, just the data. Sales, 9,293 crore in March 2026 versus 8,808 crore a year ago. That's a 6% jump. Steady. EBITDA, 3,281 crore, up 27% year on year. That's a big jump in operational efficiency. Net profit, 2,424 crore versus 1,497 crore last year. That's a 60% jump. That's unusual. And EPS, earnings per share, $12.91, up from $8.05 a year ago. 60% growth. Now, look at the December 2025 quarter. That was only 1,436 crore profit. And in just 1 quarter, March 2026, it jumped to 2,424. Visual cue. Bar chart goes green on March 2026. That's a 69% jump in a single quarter. Whatever happened in this quarter, the business fired on all cylinders. Look at this chart. March 2025, 1,497 crore. December 2025 dips to 1,436 crore. And then March 2026 It breaks out to 2,424 crore. That jump from December to March is what should get your attention. Because breakout quarters like this, they don't go unnoticed for long. So what could actually move this stock from here? First, a dividend announcement. PSUs with this kind of profit almost always reward shareholders. And when income investors see a fat dividend yield on a PSU, they come in fast. Second, crude prices. If global oil stays firm or climbs from here, upstream producers like this are the first to benefit. The margins expand fast. Third, institutional re-rating. FIIs and domestic funds have been underweight on PSU energy for a while. A blowout quarter like this forces them to revisit their models. Fresh coverage, fresh buying, fresh price targets. And fourth, analyst upgrades. When profit jumps 60%, every analyst who covers this stock has to go back and upgrade their target. Upgrades create headlines, headlines create momentum. Now, I have to be honest with you, because that's the only way this works. There is one real risk here, and it's not small. Crude price volatility. This is an upstream PSU, which means the government can influence how much they actually realize per barrel. Subsidy sharing, pricing policies, these can eat into margins fast. If crude crashes globally, this company feels it immediately. And if policy changes cut into their realizations, those 60% profit numbers can reverse. This is not a buy and forget stock. You watch crude, you watch policy, you stay alert. But here's the flip side. The same government backing that creates the risk is also what gives you the stability and the dividend certainty that no private player can offer. Double-edged sword. Know which side you're on. So, let's land this. Sales up 6%. EBITDA up 27%. Net profit up 60%. EPS up 60%. A government-backed energy company just showed the market exactly what it's capable of. And most people weren't watching. If you found this useful, like, subscribe, hit the bell. More of this coming every week. And remember, do your own research. I'm not SEBI registered. This is not financial advice. It's just me finding names the market is ignoring.